Welcome everyone to HueFin, your trusted source of news according to the price chart. I'm going to give you all an update on the stock market for today, preferably the futures, the NASDAQ, the S&P 500, as well as the Dow. Definitely a lot of negativities coming out recently regarding the coronavirus, as well as with Iran, the situation, the dispute that's going on between Iran and America and Iraq. So you're getting the notion, and a lot of these narratives is being pushed in the media about a possible recession, a global recession, possibly even a crash across the global economy if the coronavirus or even the dispute between Iran and America doesn't dwindle. So it is about time for us to give you all this update on these three futures markets to see whether or not we are going to continue to see a bigger move to the downside or just maintain a consolidational trading range. So if this is your first time watching our video, you guys appreciate the content, definitely hit that subscribe button, like and share the video, and then follow us on Facebook because you'll see the outcome of our other forecasts that we do on our website at HueFinancial.com. So now let's talk about this article first, and then once we conclude with this article, we'll go ahead and give you an update and what we expect the market to do in the NASDAQ, the S&P 500, as well as in the Dow. Okay, so make sure you stay tuned at the end of this video to see our projections. So this article, the 29th of January, was when it was written to the internet. The coronavirus could lead to a global recession if not contained, as the death toll rises to 132. I'm quite sure that death toll is a lot higher now, seeing that today is the 31st and that article was released on the 29th of January. So now everyone is scared, right? Everyone who deals in the financial markets are keeping a keen eye on the developments of this coronavirus. Seemingly there is a lot of things going on to suppress the spreading of this virus, which it needs to happen. I mean, you would expect that to occur when you have a disease being spread amongst the people that could cause mass hysteria and even doubt into people's mind as into the safety, whether or not they could go out and spend their money. Should they go to work? What should they do? And now there's more calls for effort in controlling the spread of this virus. This virus, according to some experts, could become the reason for a heavy global recession. And then in the first paragraph of this article, look right there, the effects of the coronavirus as it continues to spread might very well crash the global economy. There is so much could, might, very well could be language in this article. There's one individual who spoke on CNBC's Trading Nation on this past Monday. His name is Stephen Roach. He is a former Morgan Stanley analyst for Asia. And he expressed his fears that this outbreak of the coronavirus could lead to a total breakdown, especially in the weaker economies. That's his quote right there. Now, he's only comparing the current situation with the coronavirus with the SARS event that happened in 2003 in China. Stephen Roach was in China at that time back in 2003, and he witnessed firsthand and all the problem that the SARS caused for the Chinese. The idea of a recession for the coronavirus is not that far-fetched. The idea that the coronavirus could lead and could cause an unavoidable recession is not that far off. Well, how far off is it? These are just some of the things that the Chinese government has done to try to suppress the coronavirus from spreading. They initiated a lockdown in Hubei province. They extended the Lunar New Year, and then many businesses across China has completely shut down operation of their facilities, and even require some of their employees to work at home. That alone could cause a major problem for the global economy, especially seeing that China is the head honcho in the manufacturing arena, to where the world depends on the product that it develops. And if people don't go to work and that the businesses are shut down for an extended period of time, it will have a trickle down effect. And if this spread of this virus does not get maintained, not only will those businesses remain shut, more and more businesses would do the same thing. Also, outside of China, you have businesses outside of China altering their business plans as well. For instance, you can see right here, British Airways. They have suspended all flights to and from mainland China. It's stated, except for essential travel, I guess, to get people out of that particular arena. They might have some flights to go in and bring them out of that condition. I even saw on the news recently that some of the pilots for American Airlines are on strike because they don't want to fly into China knowing that the coronavirus is spreading there. They are putting their own lives in jeopardy when they go out to China and fly and pick up more passengers. All of these measures, like we said, the shutdown, having employees work at home, the manufacturing capacity is being decreased based off no one working. It's literally like a ghost town over there in Hubei province. You expect it to affect the global financial markets. The longer it goes on, the heavier the consequences. Understand that. So, this article also picks up more of what Stephen Roach said. And I quote, this is what he says, and I quote, "Hopefully, as was the case during the SARS-related disruption of 2003, this will be a temporary disruption to the China and world economy, followed by a post-virus rebound in the second half of 2020. So Stephen is anticipating the stock market to rebound. So in the beginning half of 2020, expect the market to move lower. But once the overall disruption of the coronavirus dwindles, we get a vaccine, wherever the case may be, he's expecting the market to rebound. But with China and the world on a far weaker growth trajectory, this could be, see there go again, this wishful language. This could be wishful thinking. This article ends with, can the coronavirus be contained? Already, the number of confirmed cases has surpassed those of the SARS epidemic in 2003. Recent reports state that confirmed cases of the coronavirus already hit 5,974 cases. The SARS epidemic only had 5,327. And even worse, Novartis stated that it could take over a year just to find a new vaccine for the coronavirus. So does the situation look like it's getting better or worse? Do you think the stock market is going to continue to move lower or higher? Will the coronavirus cause the 2020 recession that so many of these experts, pundits have been talking about literally every month, every year, and every day? You'll see somebody come out saying that we're due for a recession, that we're due for a depression, that we're due for a market crash. Could the coronavirus do that? Is that the match that's going to light the fire of a bear market? Well, you can only tell that by looking at the price chart. So let's do that right now without wasting any of your time. Before I get started in that forecast, I want to update each and every one of you on our last video that we did for the NASDAQ, the S&P 500, as well as the Dow. It was the video to where we had on the thumbnail, the stock market will continue to move higher unless, which was right here on the 9th of January. We're just planning on the market in the NASDAQ to continue to see higher price. And there you are. Okay. 1.58% at the very top of our forecast. Or if you was able to top the very high end of the market from the 24th of January, about 3.25. So we saw that coming. Now let's get rid of it. So the daily time frame in the market for the NASDAQ does not look good. We have tried on 2 occasions to move higher in the NASDAQ. And on each occasion, we got rejected. Another thing about the NASDAQ that is causing a lot of negativity is 9,100 points. That particular area had to be held for support in order for the market movement to go higher. So the daily time frame is not looking good for the NASDAQ. The weekly time frame as well is not looking that good. I will tell you though that the prospect of the NASDAQ trying to hold this area, I would say around like 89.60, is still in play. Just pay attention to the amount of volume that's being revealed on that weekly price bar. Okay, so going back to the daily time frame, we are going to anticipate some movement to the downside, follow along with the majority of the market, because everyone has a lot of uncertainty. They don't understand what's going to be the ending result of the coronavirus. The stock market is going to be closed throughout the weekend. Anything can go while the market is closed. So they're just taking precautionary measures right now in the stock market. So like I just stated, the market can find some support at 89.60. Okay, so we'll go ahead and do a TP there, right? Let's go ahead and do it right around there. So it's about 1%. I mean, we can see like another 1% market move to the downside in the NASDAQ. Okay. Now, when I zoom out, the market can still literally come all the way down, I would say, to about 8,800 points. Okay, so we're going to play the market in the NASDAQ to continue to move lower. If we close the way that we look right now on today's daily price bar, I'm definitely expecting that 89.60 be taken out and be looking for around 8,900 points for TP. So it'll be about like another 1.5% market move. Okay, so I definitely want to give you all that heads up too. So this is it. Definitely wanted to go ahead and update you all on the NASDAQ. Let's go ahead and move on and take a look at the S&P 500 real quick. And again, update you all on S&P 500. We saw the market move higher there on the 9th of January. Almost about 1% profit in that particular forecast. Or if you was able to time it at the top, about 2%, because the market came up there twice. So let's get rid of that. Guys can see again that that's profitable. And again, I'm still seeing a lot of weakness in the S&P 500 as well. It's following the same track as the NASDAQ. So to give you another reason, 32.75 definitely would have been great to see the market hold that for support. But now we're closing back at the lows that we saw on the 27th, 28th, and then on the 30th of January. So we still got some continuation of movement to the downside to go through in the S&P 500. Okay. Now you can see a lot of congestion right around here in beginning half of January 2020. We can definitely see the market hit 32.20 next week. And I won't be surprised if that even happens. I mean, we're not even that far now in the market for the S&P 500. So I would TP some of that off around 32.20 next week. But definitely, let me take a look at it on the weekly chart first. Yeah, that 3220 or 3200 point level definitely needs to be support in order for us to get like that rebound that Roach was talking about in the second half of 2020. So we're just going to hold it there. Definitely a lot of weakness is here. It's might even probable that we might even come all the way down there. Okay, so I'm going to hold it just like that. 3156. Ultimately, try to be support, but I'm not necessarily saying it will. It will TP around 3,200 points. Under the presumption we do see strength come into the market. Okay, and we're playing this one on the daily time frame. Now let's move on and take a look at the last one, which is the Dow futures. So here we are. This one looks even worse than the NASDAQ and the S&P 500. Got that profit out the market, 1.16%. So let's go ahead and take that out. And we need to talk about the market in the Dow right now. The market overall is giving us a lot of weakness. Out of the three indexes, this one is the weakest. Okay. And this area is the first resistance point, around 28,600 points. Next one is going to be around 2,800, 800 points. Okay. This area here will be our TP price, around 28,200 points, which will grant this forecast about 0.83%. I can see the market trying to hold there. But if continual weakness happens for this upcoming work week, definitely that will not hold. And given the massive spread that is coming out on today's trading, it's possible we could see the market try to test 28,000 points or even a little bit lower, around 27,800. So, I mean, it's there. The market definitely is giving us some weakness across the board. A lot of the market participants who value the market action is definitely seeing this ongoing. And if we do continue to see the coronavirus spread and get worse, we would definitely break this massive support area in the Dow, which is like another 5% market move to the downside. We would definitely break that. Okay, so understand that the market participants are watching the current situation in the world. And if the news continue to come out and it's negative, we will see lower price. Okay, so this is our updated forecast for the NASDAQ, the S&P 500, as well as the Dow. And we are in agreement with what the market participants are showing us. The market is showing us that they are nervous, that they are doubtful in the overall strength into the market right now. And they will continue to pursue those lower prices because there's no positivity being seen in any of the media outlets right now. And based off the market being closed over the weekend, you would expect everyone to take profits and sit on the sideline until they'll have a definitive picture as to the outlook in the future of 2020. As long as there's uncertainty regarding the coronavirus, the market will not be moving higher. Okay, so questions, comments, as always, leave us one here in the comment section of this video. Join us on the other social media platforms because you're not going to get the most accurate price forecast predictions anywhere else. Make sure you manage your profitability, and I'll see you all on the next one.